Hello, everybody. Thank you so much for joining me. In addition to the presentation, we'll also send out a link to the actual white paper that resulted from this research as well. So let's jump in to this body of work, Gen Z and investing, social media, crypto, FOMO, and family, and all those things we'll be talking about and the role that they play in the Gen Z's investing life. Just to ground you in terms of what we did, and what we're looking at. So this study really examines the behaviors of Gen Z as investors, and also looking at those who are non-investors to understand, again, what drives them to invest or not. Just to give you a little bit of information about the methodology, this was a study that we conducted on behalf of and in partnership with FINRA and the CFA Institute. We interviewed 1,569, to be specific, US consumers between the ages of 18 and 57. We also used a panel, as you may imagine, but we also did some outreach via TikTok and Instagram to reach the Gen Zs. In terms of the breakdown, who we spoke with, what the 1569 is made up of, mostly it's the Gen Z population, both the investors and the non-investors, and that's really going to be the focus of what I'll be talking about today. There will be references, just to give you a reference to the millennial investor and the Gen X investor, and you can see here how many we spoke to for each. This again was a study that we fielded in November, December of last year, and was conducted on behalf of FINRA and the CFA Institute. So with that said, let us jump into this study. And we're going to start out by meeting our US Gen Z population. As mentioned, we had 500 Gen Z investors that will be part of the study and 448 Gen Z non-investors. And who are they? Let's take a look at some of these stats. And there are two that I really want to highlight in terms of how they differ and what role that might have in terms of them being investors or non-investors. So let's start on the left-hand side of this page and looking at the 500 Gen Z investors that were included. The household median income was $40,000. That's one of the key points. You'll notice that that's substantially higher than the household income of our non-investors. Obviously, having money to invest impedes people's ability or not to be able to invest. We'll get into that in more detail later. Age-wise, they were roughly the same, perhaps even a hair younger when you look at the Gen Z investors. And the other stats look relatively similar. Male-female breakdown. The investors were likely to be, somewhat more likely to be married. Again, this is a young population. These are folks that are between the ages of 18 and 25. The one thing I do want to highlight on this page, and it'll come up later on in this discussion, is the education level. 42% of our Gen Z investors were college grads or higher, whereas only 24% of our non-investors were college grads or higher. And that really, we'll talk to that in terms of the role of education, formal education, and the role of financial education within those formal channels and what role they play. So with that said, let's talk about the Gen Z investors, because and look at some really interesting numbers. First off, Gen Z, they are engaged in the world of investing. 6 in 10 Gen Zs own some form of investment, whether that be a multitude of different things, retirement accounts, mutual funds, ETFs, or maybe just crypto. As you'll see, crypto plays a big role for them. So they are investing first and foremost. They have started very young. 1/4 of the Gen Z investors began investing before the age of 18. And then if you look at that, then 50% of the ones that we spoke to, investors we spoke to, had more than 3 years of experience in investing. So they're starting young and they're active. And then the last thing I want to leave you with before we dive into the details is what they're investing in, how much they have invested. Obviously, they're young, so they don't have huge amounts invested, but on median amount of $4,000 invested. And roughly 4 in 10 of our Gen Z investors have more than $10,000 in the market. And what are they investing in? Crypto is the top current investment that they have, with 55% owning crypto, followed by individual stocks, mutual funds. NFTs are also up there, and ETFs. Again, that's some information that we'll dig into in more detail when we talk about these investors in particular. So this is what I want to establish. As we go through this, I want to really understand what motivates our Gen Z investors to start investing. And conversely, what is preventing Gen Zers from investing, from getting into investing? So let's take a closer look and start out by looking at their attitudes and behaviors around finances, their goals, and that sort of thing. So let's jump in to the Gen Z's financial goals and challenges, just so you can really build an understanding of who Gen Z is as you know, when it comes to looking at and dealing with their financial goals. Here we're looking at Gen Z investors and Gen Z non-investors side by side. You can see here that Gen Z investors focus on much more planning-oriented goals, with the exception of vacation, which both have. But when you look at 55% of our Gen Z investors are saving for unexpected expenses. 51% are even thinking about retirement already. Being able to retire when they choose and to live comfortably is a really important goal for the Gen Z investor already now as an 18 to 25-year-old. When you look at the column on the right-hand corner, we look at what are the goals of our non-investors. They tend to be much more short-term. Being able to pay their monthly bills, 63%. That's the top financial goal. Not living paycheck to paycheck is one for 63% of our Gen Z investors. And then also there's the vacation and travel is obviously a goal down the road for them as well. One other interesting stat on the Gen Z population is that being financially independent is much more likely to be a goal for them than it is for our Gen Z non-investors, with 47% of our Gen Z investors saying, hey, that's a goal for me, versus 35% of our non-investors. When we look at the investors for the Gen Z side again, they look very similar to our millennial and our Gen X investors in terms of what is important to them. This group of Gen Z investors tend to be very self-assured. Over half of them, as you can see here, 57% in fact, feel extremely or very confident that they'll be able to reach their financial goals. That's in contrast to only 33% of those non-investors. So there's a real gap or a real difference in terms of how confident they are in being able to reach their goals. And as expected, Gen Z investors are more open to taking on risk. They feel more comfortable with risk. We'll talk about risk later on, but they're more open to taking on risk in order to reach those financial goals. 32% versus 19% of non-investors say, I'm willing to take on financial risk so that I can reach my financial goals. That sort of speaks to the fact that they are investors. They're open to that risk. When it comes to challenges, Gen Z investors and non-investors alike cite cost of living and inflation as their top, by far, challenge when it comes to meeting their financial goals. I feel that had we done this research at a different time, that number would not have been so high. This was done again November, December of 2022, when the inflation was all the talk in terms of the news media. So obviously it was top of mind. When we dig a little deeper and go beyond inflation, some interesting things start coming out in terms of how investors and non-investors are behaving. So Gen Z investors, their top one behind inflation is the economy and the market conditions. That's the top challenge to meeting their financial goals. It's not surprising that they're invested in the market. They are very active at monitoring their investments, as we'll see later on. And so it's not surprising that they are citing that as a key challenge or a key concern when it comes to reaching their financial goals, which is different when we look at the Gen Z non-investors and their top challenges to meeting their financial goals. They have employment and income concerns, right? Again, looking at things a little more in a short-term way. Unexpected expenses is also a key concern. And the one that I want to highlight here, because it's a theme for the non-investors, which is maybe not a surprise for you, the audience, is that the lack of knowledge about finances and investing is a top 3 challenge for our non-investors when it comes to reaching their financial goals. So that's a great segue into knowledge and understanding. Let's take a look at how our Gen Z population across the board are informing themselves and learning about investing and financial topics in general. So this lists what they're using. And what's interesting, there's a number of things interesting here. One is that social media is at the top of the list in terms of what Gen Zs use to learn about investing and financial topics in general. Social media plays a huge role. Almost 50% say, hey, that's a source that I use. But you'll notice also that they're using a lot of different sources. They're using internet searches. They're using their parents and families, a big theme that we'll be talking about. Friends, financial apps, it goes down the list. They are using a number. In fact, 55% of Gen Zs are using 4 or more sources of information to learn about investing, to learn about financial topics in general. So they are very engaged and are not just using a few sources, which is more likely among our Gen Xers, who are more likely to say, hey, I'm using internet search was the top for them. Financial services companies, financial services professionals for the Gen X populations. Similarly, millennials are more likely to use internet searches, financial services companies, and they also are using social media. But what really struck me here is that our Gen Z population is using a number of different sources to learn about and stay engaged and informed on financial topics. Now, what they use and what they trust are 2 very different things, as you could maybe imagine. So let's take a look at how that panned out. So when it comes to sources of information that they trust, it looks a little bit different. So you'll see that family and parents and financial professionals are the top 2 sources they trust. So family, again, and we have a whole section on family and the role that family plays. It's an important source of information, but also one that they trust much more than perhaps what they're reading on social media or the internet in general. Financial professionals as well is a source of information that they are more likely to trust. Conversely, we've got social media. As I mentioned, a lot of them are using social media to learn about things, but social media is a much less trusted source of information. So while they're willing to read it, they seem to have a healthy dose of skepticism of what they're reading and are less likely to trust what they're seeing online. So when they are going online, whether it be social media or internet searches, what are they going? And this is fascinating to me because YouTube rules, as the title says, it really does for all populations. It's a key source, not only for how to fix your toilet, but apparently also how to learn about and manage your finances. So YouTube is a really key source of information. And then here you'll see that they're again using many different sources. So for the Gen Z population, it's YouTube, it's general internet, Googles, right? We all do that. Instagram, TikTok, Twitter to a lesser extent, Reddit and Facebook are the top sites that they're visiting when it comes to learning about investing and financial topics. Millennials and Gen Xers are a little more narrow in terms of what they're using. I'll start with the millennials. They too are using YouTube at the highest clip, followed by just a general search, and then by Facebook. Facebook for both for both millennials and Gen Xers tends to be a top 3 source of information for financial topics. Now, when online, how are they determining who to trust? Right? Who do they trust? And for this is just looking at the Gen Z population, the most important thing is, does the source explain things clearly to me? Do I understand? Again, this feeds into the curiosity, which we'll see in a second as well, at curiosity of wanting to understand what it means and having a hunger for the education. That really highlights for me an opportunity for financial services companies to provide education, explain things more clearly, and build that understanding so that they do become investors and confident ones. So 69% say, hey, explain things clearly to me. Information has to be relevant to me. Is it hyper customized? Is it about me? Is it about somebody like me in my situation? That's really important to me. Does it share their own financial performance? And prior to this quantitative research, we also did a qualitative body of work on the same population. And we heard that a lot, where people said, I'd like to, when I go online and some, fin influencer is talking about something, I like when they show me what they're doing so that I can, they're doing what they say they're doing, not just telling me what to do, but also it brings it to life and makes it a little more relatable. So those are really the top 3 ways in which Gen Z investors decide who to trust. I talked about education earlier on, and education really does matter, and formal education. So this is looking at what sort of formal channels did they learn about, through which do they learn about investing and finances in general for those who don't invest. And what strikes me here is that 42%, so over 4 in 10, said that they have had no formal education or classes about financial topics, none. So it's not surprising that when we ask them about the barriers to investing, one of the key ones, the top 3 ones, is the fact that they don't feel that they have the knowledge. Again, there's a knowledge gap between these 2 populations. Another thing that I want to point out is that when you look at the investors and the non-investors, it's the fact that the investors are more likely, if you remember the number from one of the first slides, are more likely to have gone to college or graduated college, and there too they're getting the opportunity to take classes on investing. So there you can see 42% have said yes, in college I had some sort of formal education when it comes to finances and investing, versus only 19% of our non-investors. So again, there's a big gap here in terms of the percent that had some sort of formal class or school through higher education on financial topics. Again, it just underscores in a big black market that education makes a big difference. So let's next take a look at what motivates people, what motivates Gen Z in particular to invest, and then also conversely, what is the barrier to investing for those who don't. So we'll start with the investors. So this shows the list. We showed them a list of things that might influence their interest in starting to invest. And the thing that popped to the top, actually for all 3 generations, Gen Z, Millennial, and Gen Xers, is that ability to invest in small amounts, right? And that is the number one. 67% said that's the top reason. Second one was curiosity, 65%. Again, that might lead back into education. Hey, I've learned about it and now I'm curious about it, and therefore I'm going to invest. But to go back to the top one, the ability to invest in small amounts, that may be in partly due to the fact that apps play such a big role for this population. Investing apps, think Robinhood. Actually, if you go to Robinhood right now, last time I looked, they have the first thing, invest $1 is all you need to invest. So that makes the barrier to entry very low, or the bar to enter very low. You can enter in investing $1. I can get my feet wet. I can see what this is like. I'm not going to lose much money by doing this, but it gives me the confidence and the sort of opens up my eyes to how this works. And I can do that with a really small amount of money. Or when you go into Venmo and you see that you can do it through your different apps, it's really much more prevalent. And I think that's why that ability to start small pops to the top for this population. To round out our top 5 in terms of why they start, as mentioned, ability to invest in small amounts, curiosity or their own interest, obtained a certain amount of money to invest. Obviously, you need money to do this in a larger amount. So 57% said, hey, I got money. And we'll look at that because there's a difference there too between our Gen Z investors and non-investors. Parents and family members, 54% said, hey, that's the reason why. And we'll dig into that in a minute. And then the ease of opening an investment account is the 5th of the top 5 reasons that our investors start to invest. So let's take a look at, let's piece these things apart a little bit in terms of what do they do when they start? And this is where crypto really came to life in the results. So cryptocurrencies are really a gateway to becoming an investor for this population, or had been a real gateway to becoming an investor. But crypto also plays a role in their ongoing life as an investor. Let's take a look at that. So 44% of our Gen Z investors said, I started with cryptocurrency, followed by individual company stocks, mutual funds, NFTs, outpace ETFs, individual company bonds, government bonds, and then last but not least, the alternative investments sort of shows you what they are starting with. But again, over 4 in 10 have started with crypto. That number is reflected then also when you look at what they're currently invested in. You saw this number earlier on in the presentation. 55% are invested in crypto. That's the biggest holding they have in their portfolios, 55% invested in cryptocurrency. And then you can see the way things play out in terms of their current investments is very similar to where they start. So individual company stocks following that, and the top 3 being in mutual funds. Cryptocurrency story continues in that when you look at the average amount that they've invested in crypto is $1,000, but the average amount that they've invested altogether is $4,000. So a quarter of their investments are in cryptocurrency. So it really is not only encouraging them or where they start, but it's also where they have continued up to this point. Let's talk about FOMO, or the fear of missing out. The fear of missing out is really not only a catalyst. We saw it on a prior slide in terms of folks saying, 41% of the Gen Z investors saying, I started to invest because I had a fear of missing out. Fear of missing out on crypto, fear of missing out on a GameStop, GameStop stock, that sort of thing. So 41% said that's the reason they started, right? And that's half of, and so that's when they start. So, and then half of them said, hey, I've made an investment based on a fear of missing out. And they far outpace the Gen Xers. However, it's interesting to note that our millennial generation is even more likely to say, yeah, I made an investment based on the fear of missing out, with 60% saying that they've had a fear of missing out. So let's go back to our Gen Z population, that 50% who said, yeah, I made a specific investment because of the fear of missing out. And I'm gonna let you guess what they're investing in. I'm assuming you can probably guess it. Investments purchased because of a fear of missing out, the most likely one are cryptocurrencies. So 57% said, yes, I've had a fear of missing out investment, and what I've invested in is cryptocurrency, followed by individual stocks, meme stocks, NFTs, real estate, and options being sort of the main one. But you can see how much more of a role cryptocurrency has played up to this role. We'll see how that plays out over the coming years, but that is really the top thing that they've invested in because of that fear of missing out. Let's take a closer look at investing apps and the role that they play with this Gen Z investor population. 65% of our Gen Z investors said that they manage investments and make trades on an investing app. That's followed by websites, just shy of half saying that. And then it really drops out, contacting a financial services professional. Not too surprising with such a young population. Contacting a financial firm, also much lower at 15%, and then robo-advisor, surprisingly at only 14%, is how they were, what they use to manage and make trades. So 65% are using their investing apps. We asked them also, well, have you ever gotten a suggestion from your app? Many apps push out suggestions. So 69% said, yes, I have actually. I had an app that's made a suggestion, and then to follow that, 67% of those said, yes, not only have I received a recommendation from my app, but I've also acted on that recommendation. So this to me illustrates that they're not only actively monitoring and making trades and engaging with their financial apps, but their financial apps are influencing the decisions they're making when it comes to investing. And this just sort of builds on a similar story. So Gen Z investors, they're actively monitoring what's going on. So again, this is maybe why the markets and economy impacts them more in terms of their financial goals or concerns. But they are 68% of them are looking at or monitoring their investments at least once a week, if not more often, right? That's a lot of people doing that. So they're engaged. So they're not only on their apps trading and monitoring, but they're doing this at a very fast or very frequent clip. Similarly, their frequency with which they buy and trade investments is also quite high, just north of 4 and 10 buy and trade investments on at least a weekly basis. So they are active, and this is interesting in terms of millennials and Gen Xers. Their numbers are much lower when it comes to their activity online, especially Gen X, who are much less likely to be engaged in monitoring and buying and trading. I don't think this is a surprise to anybody, but I'll follow up with an interesting data point. But this is just looking at their openness to taking on financial risk in general. So there's a big difference. 46% of our Gen Z investor population said, yes, I'll take substantial or above average financial risks. I'm comfortable with that. Whereas only a quarter of our Gen Z non-investors said that they would be open to taking substantial or above average financial risk. the interesting data point that we discovered is that there seems to be, and maybe this makes a lot of sense when you think about risk, but there seems to be a correlation between gambling and their, they're actively gambling and their openness to investing, right? So when we looked at that, we asked them, do you gamble in various different forms, whether it be in person or online? But 61% of those who gamble online or in person, so I gamble in some shape or fashion, are also investing, right? Versus only the 29% of our investors, 61% say they gamble, whereas only 29% of our non-investors say they gamble. Again, makes sense when you think about gambling and the inherent risks involved and their comfort level with being able to take risk when it comes to finances. So again, there's that interesting correlation between gambling and investing. And then another interesting stat that we discovered is that 70% of our Gen Z investors who gamble frequently have invested in crypto, and 38% have invested in NFTs as well. So again, it's their openness to gambling, but also in particular, potentially what some would consider higher risk types of investing. So enough about the investors. Let's talk about the non-investors for a minute, and what are their barriers? And I think that the top barriers aren't a surprise. I don't have enough savings. They're related to money, finances. Not enough. I'm living paycheck to paycheck. Remember, one of their goals was to not live paycheck to paycheck, not be so short-term. So it's not surprising that those two are the very top barriers to investing. They're focused on the now. They're focused on paying off debt. You can see that as well. So those are the main barriers to start investing. The one that came in the top three, though, 52% of our non-investors feel they don't have enough knowledge about investing. And I think that, again, it's a theme that we've been hearing about this population: lack of confidence, the seeming lack of knowledge about investing being a key barrier to starting. But this really highlights an opportunity to educate the Gen Z investors to understand what it means. And then if they understand what it means and they have small amounts that they can invest in, then they might be more likely to dip their toe into the investing pool. Sticking with our non-investors, our Gen Z non-investors, while they don't invest now, they seem open to investing in the future. Again, once they're no longer living paycheck to paycheck, or once they maybe have a little fewer expenses or have paid things off. To me, that's when they start investing. However, there's still a gap when it comes to looking at how confident they are about making investment decisions. Again, this all feeds back into that narrative of knowledge and helping them understand, because 36% of them said, I'm not very confident or not at all confident in making decisions around investing. I'll pause there just for a second. I don't see any questions in the chat. Anybody has any questions? If not, I will continue. I don't see any questions, so let's continue on. As you know from the title, we've talked about social media, we've talked about crypto, we've talked about FOMO, or the fear of missing out. I want to spend some time talking about the influence of family on Gen Z investing behavior, because it's a really interesting story here. Let's take a look at it. So parents do play a really important role when it comes to the investor's journey and their likelihood to start investing. So just to bring up a couple of stats that we've already talked about, remember that parents and family are the most trusted source of financial and investing information for Gen Z. They are relying on their parents, or listening to their parents perhaps, on this topic. And 54%, or over half of our Gen Z investors, had indicated that parents and family were a key motivator to start investing. So they're a source of information, they're a motivator to start. So why is that? Like, what is going on with the Gen Z investors versus the non-investors? Let's take a closer look. So when we look at the parents' own behavior, right? So are their parents investing? There's a huge gap here. With the Gen Z investors, 68% said, yeah, my parents invest, right? Whereas only 30% of our Gen Z non-investors indicated that they had parents who have or had invested in something. So again, if you have a parent who's investing, it's perhaps more talked about, which we'll look at next. So, of those who had parents who had or have invested, are those parents talking to their kids about investing? And it's what was surprising here is not so much that there was a difference, but that how big a difference it really was. 79% of the Gen Zs who had parents who talked about investing, right? Versus only 46% of those on the non-investor side of things. So parents are talking about it, it's becoming normalized. They're seeing it in their apps. I think about my kids, they use the Green Light app, and I've noticed, about a year ago, they started having this option to invest. So again, it's became part of our narrative. And I've got kids who are 13 and 14. So just seeing it and talking about it and starting young really, I think, makes a big difference when it comes to starting to invest or having the confidence and the knowledge to start investing. So not only are investors more likely to have parents who A, invest, B, talk to them about investing, but C, talk to them about investing at a very young age. So 47% of our Gen Z investors have parents who talk to them about investing before they were 18. So it's almost half had been talking about it, and then maybe heard about it at school, because it seems to me when I talk to older consumers, it's much less likely that they've talked to their parents or had this narrative about investing. It's maybe something that they didn't talk about at home. You don't talk about money. It seems to have shifted somewhat, at least for some, that investing and finances are a topic of conversation. And financial literacy, when you look at the high school curriculums, it's become, when I was in high school, we didn't have that. When you look now, they have a selection of financial courses to pick from. So again, parents play a really important role for Gen Z investors, and that there's a gap between the Gen Z investors and the non-investors. Let's take a look at the role that the parents play when it comes to giving money to invest, right? So if you think back a couple of slides ago, we talked about motivators to start investing. One of them, I think was number 5, was that Gen Z investors obviously need money or want money to invest, and 57% said that's the main reason they started to invest. And here are big gaps as well in terms of our investors and our non-investors. You can see here that our investors, 41% of them said that they either had received or expect to receive an inheritance of at least $10,000. And similarly, those non-investors, only 16% had received or expect to receive an inheritance. Similarly, on the gift side of things, investors are much more likely to have received a gift of at least $10,000 from family, whereas only 5% of the non-investors had received a gift of at least $10,000 from family. So the fact that investors have family members who are generous and providing them gifts and or inheritance, that influences their decision to start investing as well. So while parents, we saw that they influence their decision to start investing, they nurture that interest by talking to their kids when they're young about investing. And this might just be youth speaking on this next slide, but when we ask them, how much knowledge, do you feel more knowledgeable than your parents? So you'll see here that the Gen Z investors, half of them feel somewhat or feel strongly or somewhat strongly that they have more knowledge about investing than their parents, versus only 31% of the Gen Z non-investors. So I sort of chalk this up to, hey, I know more than my parents know, but they often, it sort of also reflects the confidence level that these Gen Z investors have when it comes to investing. So they've learned from their parents, and now they know more than their parents. A couple other generational points of interest that I'd like to highlight. This is common among different generations, but when you look at do they feel that they have headed harder than the generation before them? So Gen Z investors, 44% said, hey, the economic situation that I'm currently facing, or is currently facing my generation, is more challenging than those of prior generations. So they're pretty much on par. They just shy of half say, hey, that they have headed harder than the other generations. And then when it comes to taking on risk to reach those financial goals, 36% of the Gen Z investors said, yeah, I have to take on more risk than my parents had to in order to reach the same goal at the same age. So again, a bit of, woe is me, I have it harder than the prior generations, and I have to take on more risk to be able to achieve the same goals that my parents or other prior generations. And that brings us up to our sort of closing of this presentation. When we look at Gen Z, they're investing. They do invest, and they're a growing force, and they're digitally savvy, and they are, I wrote down here, making their way into the financial markets. I'd say they've made their way into the financial markets, and will continue to do so. So they're an interesting population, an important population to pay attention to. So just to recap, they do invest. The 18 to 25-year-olds, they are engaged in investing. We saw that in the very first slide, 6 and 10 are investing. And what allows them, or what has encouraged them to do that, again, being able to invest in small amounts has been, the key factor. Social media and the use of investing apps is another key factor that gives them access to information and gives them, to feed their curiosity about investing. But those are channels through which they've been learning and how they've been engaging with their finances. And then, as we've talked about in great depth, is the popularity of cryptocurrencies over the past number of years, as well as that fear of missing out, are other factors that really drive Gen Zs to invest. We just finished talking about parents. Parents, again, play a crucial role in spurring that investment. And that's a huge gap between our investors and non-investors. They influence, but they also assist. When you think about, again, the gifts and the inheritance that they provide. So that plays a big role. Also, parents who talk about investing with their parents, with their children, play a big role. Whereas those who don't have parents who are doing the same at home don't have that same advantage. And then just in closing, and we've talked about this a lot, is when you're looking at the barriers to invest, obviously income and expenses can't be ignored. Those are key barriers to investing for the non-investors, but it's also a lack of knowledge is also a top barrier. So a lack of access to formal financial education beyond what they're maybe getting in secondary school, that's a key barrier. And then just the lack of knowledge feeds into their lack of confidence in making those investment decisions. That brings us to the end of this presentation. I haven't seen any questions, but I'll just open up the floor again to see if any questions have come up.